Hi there, you're watching Your Trades on ET now. With me, I'm Snehi Shah, and this is a show where we're going to be summing up the trading action that we've seen today. And let's get right to it. And let's take a look at what Nifty has finally managed to close to. And we have Nifty that was in the range of 25,000 thereabouts today. We've closed exactly right there. 25,001 is where we have closed on the Nifty today. So really holding on to the Nifty, that 25,000 mark by the skin of its teeth, and a 0.6% uptick is what we've seen on the Nifty today. Sensex 2 in tandem, almost a 0.6% uptick is what we've seen on the Sensex as well. Nifty Bank has slightly underperformed the benchmarks today. A 0.3% cut coming in on the Nifty, 0.3% rise coming in on Nifty Bank, slightly lower than the benchmarks in today's trade. The advance decline ratio was steeply in the favor of the advances today, and you have India-U.S that's gone up by 4.3% today. 18 is the mark that we have reached in today's trading session, but not much to worry about because you have a host of stocks that have done very well in today's trade. You have Bajaj Auto, JSW Steel. JSW Steel was in focus after the Supreme Court has announced a status quo on the liquidation of Bhushan Power and Steel. So that stock was in focus today. Big news flow coming in on big positive coming in for JSW Steel. That's BPSL. That's the company whose liquidation has been stalled by the Supreme Court right now. Followed by that, you have M&M, Hindalco, Trent, Nestle, HCL Tech, ITC, 1.5% gain coming in on all of these stocks today. On the flip side, big Nifty loser today was Eternal, reading under the pressure of outflows that was being estimated by brokerage notes now that the foreign holding on the stock has been capped. You have Kotak Bank, Ultratech, Power Grid, Sun Pharma, Tata Steel and NTPC that have seen some cuts in today's trading session. Other than that, if you take a look at sectorally what has done well, you have all the sectors that have ended in the green in today's trading session. IT and auto were toe-to-toe competing for that top spot on the sectors list today. Nifty Auto up 1%, led by Bajaj Auto, M&M, Tata Motors. You have Nifty IT that was right under it, FMCG, Metal, Realty, Media, Pharma Banks and PSU Banks. PSU Banks have been your least gaining sector in today's trading session, led lower by Bank of Baroda, PSB and Maharashtra Bank. Other than this, some other top news to talk about in today's trading session. You have Paytm that zoomed on the Supreme Court relief coming in on one of its subsidiaries. That GST notice for that subsidiary has been halted, so that was a big positive coming in for Paytm. You have RBI that's all set to pay record 2.69 lakh crore dividend to the government in FY25, so that was another newsmaker in today's trade. You have Grow that has filed for an IPO confidentially. This is what sources have told us. And heavy rains on the weather front, heavy rains have lashed Mumbai. Waterlogging has been seen in key areas. And lastly, when you talk about commodities, Brent has edged up on EU tariff deadline extension, so commodities were also in focus today. So that's the kind of trading day we've had today. Lots has happened. It's not been a lackluster Monday for us in terms of news flow or market moves, and looking good for the Nifty right at that 25,000 mark. But let's understand what we can expect heading into tomorrow and for the rest of the week. We have Rachna Vaidya, founder at rachnavaidya.in, joining us on the show. And Rachna, hi, thanks so much for joining us on the show. Great chatting with you today. Give us a sense of the kind of market moves we've seen today, where you have broader markets that have more or less been in tandem with the benchmarks. Do you believe that this support that we've seen coming in on the overall market, we can expect that headed into tomorrow as well? And for the rest of the week as well, what kind of market action are you keeping in mind?
Yeah, good evening and thanks for having me here. Well, today's price action and the price action of the last week has shown us two things. One, the Nifty was in a tight range in the last few weeks, 1 or 2 weeks, which was around 24,600 to 25,000 on Nifty futures. For this week and for the coming few days, I believe that now we are well poised to come out of this range and break about 25,000 on Nifty futures. Now, I believe the break above 25,000 on closing basis has happened today itself, and you should see good amount of follow through in the remaining days of this week, wherein we could see levels of 25,160 and even 350 on Nifty futures. So I am bullish for this week.
Those are the levels that you're spotting going ahead. But Rachna, which stocks are looking good to you right now heading into tomorrow's trading session? What would be some stock-specific recommendations from your end?
Yeah, one of the recommendations would be BHEL, where we can go long, and the other would be in the stock of Loda, which is Macrotech Developers, wherein again we can go long. For the stock of Loda, if we can buy the futures with a stop loss of 1410 and we can hold in to the counter for say 2-3 days, then we could be seeing levels of 1500 and 1500 plus as well on the same. And if we are buying BHEL futures, again going long and holding on for a few days to a week or two, for both the stocks rather for a week or two, then over here also we can keep a stop loss of 255 and we can see the targets of 270 and 275 for BHEL.
BHEL, two stocks looking good. To our guest who's joining us today, Rachna, thanks so much for joining us. On that note, we'll let you go. But time now to talk about some technical moves coming in, and Shrishti is joining us with two stocks that she had spotted on the charts for us. Shrishti, take it away.
Well, yes, two counters, one on the breakout side and the second one on the breakdown side we wish to highlight for our viewers. And firstly, let's have a look at one of the breakout candidates, and that is GNFC. This is a weekly chart that we have on your screen. Other than that, what we see is that it's a falling trend line breakout for GNFC because the stock has been under continuous down pressure from almost those 800 levels. Now you see the stock price is close to 550 odd rupees. But in today's trading session, it was supported by a strong move of 5 to 6%. What we rarely get to see is that all this while the stock was actually trading below or facing a rejection exactly at its 20-day moving average. But today a surprise coming in because the stock did break above this 20-day moving average, which was actually working as a resistance for this particular counter, and hence we wish to highlight this counter as one of those breakout candidates. Moving on to the next counter then, and this one is a breakdown stock. On your screen you will see ICICI Lombard GIC. This stock has been facing resistance at its 1900 levels. You will see that it's been multiple times that the stock has faced rejection at these particular levels. Sometimes it does act as a breakout level as well, but today what we did spot is that exactly once again at 1900 the stock managed to break below its level, did manage to make actually a bearish engulfing on the technical front, and was also moving below that 20-day moving average line as well, and hence we highlight this as a breakdown stock. So these are the two counters. Back to you.
Okay, Shrishti, thanks for taking us through that. So GNFC as a breakout candidate and ICICI Lombard as the breakdown, two stocks that Shrishti was spotting on the charts for us today. But let's move on and shift focus to financials now, because speaking about financials, Rajesh Bhatia, the CIO at ITI-MF, says that they have been positive on the sector. However, they have taken some chips off the table. Let's go across and listen in.
We have liked financials quite a lot, although I've taken some money off the table. That's because what's happening is I think you're going to see a consolidation of profits, at least for large private sector banks in the current financial year. If interest rates come down, what happens is their asset book is really getting repriced lower. They will adjust over a period of time with their deposit costs also kind of coming down, but the profit growth will be probably, muted, I would say, in the current financial year, only to accelerate next financial year. So my sense is, given how well financials have done, they are the only conspicuous sector which is at a new high. My sense is that you should lower your expectations on certain private sector banks.
Okay, well, that's the word coming in from Rajesh Bhatia of ITI-MF. But let's move on then and let's get you the big story of the day. That has to be JSW Steel, and we are here to get you the latest on that. The Apex Court has halted liquidation of Bhushan Power and Steel. Ankur is joining us with more details on this. Ankur, what are you picking up since the last time we interacted with you, and what's the latest on this update?
Yes, Supreme Court has now halted the liquidation process for now, and this halt is only till the hearing of a petition of JSW Steel happens. Remember, JSW Steel is in process of filing a review petition, and in that process it was requested to court that till the time petition hearing happens, there should not be any action. Remember, Supreme Court had earlier ordered liquidation of Bhushan Power and Steel, and why it happened? Because they found that it was not proper on the part of COC as well as JSW Steel to implement the resolution plan. Although the resolution plan of rupees 19,350 crore was already approved through NCLT as well as other higher courts, but finally on the application of applicability, how the process was followed or not, it was found that there was improper dealings on the part of the company as well as COC in terms of implementing the resolution plan. There was found that there was delay in the implementation of resolution plan, and hence Supreme Court ordered the liquidation of Bhushan Power and Steel within 3 months. Remember, even JSW Steel had sent the claim to the banks as part of the process, but for now there is an interim relief which has come in favor of JSW Steel because there will not be any further proceedings. However, this does not mean a stay on the whole process itself, because all will depend what is the outcome of the review petition, and the final judgment will come from Supreme Court.
Yeah, good. Thanks for taking us through all of those details. So it's an interim relief, like Ankur mentioned. It's a temporary relief coming in for JSW Steel. On the back of that, the stock was the top Nifty gainer today, up almost 2.4%. But we also caught up with Sandeep Parekh, the managing partner at FinSec Law Advisors, on the matter. Let's go across and listen into what he had to say and get a legal perspective on this as well.
It's a very good measure from the Supreme Court because I think it was. I think the order itself was quite not just bad for JSW and the companies involved, but also quite disastrous for the entire insolvency process. And therefore, I'm glad that at least they've stayed their own order for the time being, which itself is a good step, because usually when review petitions are filed, most people don't get relief. So I think it's a great step. I'm not saying that they're going to win at the end of it, but at least stay ensures that they don't need to unscramble the egg later.
Okay, so that's the word coming in, a legal voice coming in on this entire JSW Steel matter. But let's also go across to Rabinder, who's waiting by a list with a list of all the other stocks that were in focus as well. Rabinder, take it away.
Well, as Narayana Rudala is in focus, our company has announced its Q4 number, and company reported revenue at rupees 1475 crore, which saw an uptick of more than 18% year-on-year basis. And if we talk about PAT, then PAT also saw an uptick of 3.5% year-on-year basis, and EBITDA also saw a good uptick of more than 22% year-on-year basis, and company's margin has improved from 25.3% to 26.1%. Moving to next, GNFC is also in focus, where company also reported a Q4 number, and company PAT saw an uptick of 29% quarter-on-quarter basis, and margin has improved from 7% to 11.7% on a sequential basis. So back of this strong Q4 number, GNFC is also in focus. Moving to next, Divi's Lab is also in focus, where company signed a long-term manufacturing and supply agreement with global pharma companies, and company expect meaningful revenue contribution from this long-term agreement. Apart from this, LT Food is also in focus, where LT Food has joint venture with Kameda to expand portfolio and further strengthen the roasted gluten-free snack segment. So back of this, LT Food is also in focus. And lastly, Paytm is also in focus, that Supreme Court has staged GST demand order of rupees 5,712 crore on First Game Technology Private Limited, which is a subsidiary company of Paytm. So back of this, Paytm is also in focus in today's trading session.
Okay, Rabinder, thanks for taking us through that list of all the stocks that were up in a buzz today. But let's shift focus and looking forward to more growth with rising demand. Hitesh Chimanlal Doshi from the Vari Group talked about the expansion plans and the target for this calendar year for the group. Let's go across and listen in.
Manufacturing incentives are going to be continued. Due to that, we had planned to expand from a 1.5 gigawatt to the 3 gigawatt. And looking to the customer's response for the last, I will say, 12 to 14 hours, we think that we may have to expand there more. We have to expand to meet and supply these orders. So we cannot stop the expansion, as we have already committed to the customers, and this order book is also growing. So we have to keep on growing in the expansion and the capex. We are increasing our US manufacturing capacity to double. In India also, at various times we have declared in the last 2 months how we are increasing our Indian capacity also. And altogether, how we will reach to 26 plus gigawatt in this calendar year.
Okay, so that's the word coming in from the management at Vari Group. But let's move on and talk about a stock that took a steep knock in today's trade. Almost 6.5% lower was Balakrishna Industries on the back of a weak quarter for a set of numbers. Now, Nuvama has also downgraded the stock to hold and cut the target price as well. Varun is here with more details on the note and the earnings fine print of Balakrishna Industries that led to a 6% knock on the stock today. Varun.
Well, so Nuvama has downgraded Balakrishna Industries to hold and they have cut their price target from 3,100 to 2,700 now. Now they say the overall results of the company were in line with expectations on the back of higher volumes and realization, but the company being a OHT player, it is now entering the TBR and PCR segment with a capex of around 3,000 crores. Now they say over the medium term, the increasing presence in the TBR segment is likely to be challenging for the company because there is high competitive intensity in this segment among the mass market players. And these firms, the mass market players, they actually have low EBITDA margins of around 15%, and also they trade at a lower multiple when you compare it with Balakrishna Industries. So these are some of the problems while entering the new TBR segments. They also say that they are factoring in the larger capex that the company is doing, which will actually lead to higher depreciation, interest costs, and also decline in other income, and that's the reason they are cutting their FY26 and 27 EPS by around 3%, and they have downgraded the stock to hold and cut their price target from 3,100 to 2,700 now. So keep an eye on Balakrishna Industries today.
Okay, so Balakrishna Industries is a stock in focus, but let's move on. And on 2080 now exclusive, according to sources, Grow is all set to debut on D Street with an IPO. The company has pre-filed a DRHP with SEBI and the bosses confidentially. Anurag Joshi is here with more exclusive details on this. Anurag, take it away.
Billion Brains Garage Ventures, the parent company of online stockbroker Grow, has filed the draft of a document for a proposed initial public offering. Sources have told ET Now that the company pre-filed the draft red herring prospectus confidentially with the Securities and Exchange Board of India and the stock exchanges. Now, this was announced through a newspaper advertisement on May 25th. Grow was founded in 2016 by four former Flipkart employees. This included Lalit Keshre and Harsh Jain. And the following year, it had started its operations. Now, if we look at the valuation for the company ahead of the IPO, that is pegged around $7 billion. That's according to the company financial research site Traction. And if you see the banks who are managing the issue, the JP Morgan, Kotak Mahindra Capital, Citi, Axis Capital, and Motilal Oswal Securities. SEBI had introduced the mechanism for the pre-filing of the draft IPO documents confidentially in 2022, and the intention was to allow founders of companies to share their disclosures with the regulator and with the exchanges until the time they firm up the plans completely about going ahead with an IPO or an equity offer.
Thanks for that. All eyes are going to be on this new kid on D Street that's going to be listing soon. This is at least what our sources are telling us, and that's Grow in focus. But let's move on and talk about the top Nifty loser today, and that was Eternal, erstwhile Zomato. That stock took a fall of anywhere between 4.5% and 5% in today's trade, and well, 4.5% lower is where that stock ended today. The stock could see outflows of 840 million is what brokerages are estimating, and both MSCI and FTSE will reduce weight on this stock. This follows a reduction in the foreign ownership limit, which is the FOL of the company, that has now been reduced to 49.5% from 100% earlier. The FTSE weight reduction will lead to outflows of $380 million on the 27th of this month, which is tomorrow, and MSCI weight reduction to lead to an outflow of $460 million on 30th May. Now, unlike headroom-related reductions, which are implemented in a phased manner, a direct FOL cut may lead to a full investability weight reduction in a single step during this interim event. Remember, last week the stock was down more than 3%, and if you take a look at the stock's fall from its 52-week high, the stock is lower by 22%. So that's the take on Eternal coming in from brokerages, and that's the reason that the stock was also haunted in today's trade. down about 4.5%. But let's move away from that and talk about another macroeconomic development, and that's the RBI has declared a record surplus transfer of 2.68 lakh crore rupees for the fiscal year 2025, exceeding North Block's budget estimates of dividend receipts and for this fiscal, and beating the FY24 payout as well. So a new record high coming in on this front. We caught up with Gaura Sengupta, the chief economist at IDFC First Bank, to decode the same. Let's go across and listen in.
Our inflation models are pointing to headline inflation around averaging near the 3%, 3.5% mark. RBI's inflation estimate is for FY26 is 4%. So RBI is in a very comfortable position to ensure that the full force of monetary policy is focused on growth. But on the growth indicators front, a good, well-distributed monsoon, not just an early monsoon, but a well-distributed monsoon, should ensure that the rural side of consumption should pick up in FY26. But that said, we still have certain risks. For example, the urban side of the economy is not doing so well in terms of consumption spend. Also, you have private corporate capex, which is also a bit tentative, which is understandable given all the trade uncertainties. So right now, both fiscal as well as monetary policy need to be growth supportive. And the good news is that inflation is more than well under control.
Okay, so that's the word coming in on RBI's dividend to the government this time. But let's shift focus and talk about the weather, because if you are in Mumbai, you know that rains have wreaked havoc in the city ever since last evening. Mumbai has welcomed monsoons with heavy downpour, which has caused waterlogging in several parts of the city. Remember, rains have arrived early by at least 8 to 10 days than its normal schedule. And AVM GP Sharma, president at SkyMet, shares that the rain will likely continue for the next 3 days as well. Let's go across and listen into what more he had to say. What are the predictions for the week ahead when it comes to the rains?
It is different monsoon in that respect, and possibly we will see this activity going on for the next about 3 days or so, simultaneously on this Western Ghat side, West Coast also, and over Northeast India also. Another system comes up in the Bay of Bengal, which takes it further. That system will be coming up around 27th of May or so, 26th night, 27th of May, which will revive the activity over the eastern parts of the country, be it the coastal parts of Odisha, Northeast India. So that will be a fresh surge, which will, so far, it was the Western Arabian Sea current which was advancing.
Okay, so that's the official word coming in on where we can expect monsoons to head for the rest of the week in Mumbai. But let's talk about Delhi, because the flight operations at Delhi airport were also immensely affected due to heavy rains in the early hours of Sunday, and later during the day as well. The flight operations remained impacted. My colleague Samir Dikshit is joining us with more details. Samir.
The flight operations were immensely impacted at Delhi airport due to the heavy rainfall, and not just Delhi airport. On Monday as well, there was a yellow alert warning issued by the weather department, because of which Mumbai airport operator also issued advisory to the passengers that they need to check the flight details so as to avoid any major inconvenience. Now, when it comes to Delhi airport, there was a sudden and heavy rainfall in the early hours of Sunday, which impacted more than 3 dozen of flights. The official statement by Delhi airport mentions that in the early hours of Sunday, there were 49 flights which were diverted, though there was another flight tracking agency which reports that the numbers were much higher, as it was reported by the Delhi airport officially, but the numbers were a bit higher, and also it included some cancellations as well. Coming to Mumbai airport, so on Monday there was a Air India flight which was diverted in the early hour of Monday, though these numbers might increase with the passage of time when the total data will be shared by Mumbai airport operator. But because of the sudden change in weather, because of the heavy rainfall, whether it be Delhi or Mumbai, the flight operations has been immensely impacted, and because of which we have seen that whether it be airline or the airport operator, they both are sending advisory to the passengers that they need to track the flight details so as to avoid any inconvenience.
Okay, Samir, thanks for taking us through all of those updates from ground on Delhi. Mumbai, Delhi, certain parts of India, including Kerala, also have seen monsoon mayhem kicking in, which has come in very early this year compared to previous years. But on that note, we'll wrap it up on this edition of Your Trades. From me and the team that put this show together, thanks so much for tuning in.